Selling, general, and administrative expenses, commonly known as SG&A, are a term that might sound a bit dry at first, but trust me, understanding this concept can be a game changer for anyone interested in business, finance, or even just managing their own personal finances. So, let's break it down in a way that makes sense and is relatable. Imagine you're running a small coffee shop. You've got your baristas making lattes, your espresso machine humming away, and the smell of fresh pastries wafting through the air. Now, while all that is happening, there are a ton of other costs piling up that don't directly relate to making those delicious drinks. That's where SG&A comes into play. SG&A encompasses all the costs that keep your business running day to day but aren't directly tied to the production of your goods or services. So, what does that mean in our coffee shop scenario? It includes things like the salaries you pay to your manager, the rent for your cozy little shop, the utilities to keep the lights on, and even the marketing expenses you incur to attract new customers. All these costs are crucial for your business to function, but they aren't the direct costs of making coffee. Let's dive a little deeper. SG&A can be broken down into three main categories: selling expenses, general expenses, and administrative expenses. Selling expenses include costs that are directly related to selling your product or services. For our coffee shop, this could be the wages paid to your baristas, the cost of advertising your new seasonal drink, and even the promotional materials you hand out during community events. These expenses are essential because they help drive sales and bring customers through the door. Then we have general expenses. These are the overhead costs that keep your business operational but don't fall under selling. Think of things like rent for your shop, utility bills, and office supplies. If you need to buy new cups or napkins, that's part of your general expenses. These costs are incurred regardless of whether you sell a single cup of coffee or not. They are just part of the everyday running of your business. Lastly, we have administrative expenses. These are the costs associated with the management and support functions of your business. In our coffee shop, this could include the salary of your manager, accounting fees, and even the cost of software that helps you manage inventory. These expenses are vital for keeping the business organized and running smoothly. Now, why should you care about SG&A? Well, for one, it's a critical metric for investors and business owners alike. High SG&A expenses can indicate that a company is spending too much on overhead, which can eat into profits. If your coffee shop is spending a lot on rent and salaries but not bringing in enough sales, you might need to reevaluate your costs. On the flip side, if your SG&A expenses are low relative to your revenue, it suggests that your business is operating efficiently, which is a positive sign for future profitability. Let's say you're looking at the financials of your coffee shop and you notice that your SG&A expenses are unusually high. This could be a red flag. Maybe you're overstaffed, or perhaps your marketing efforts aren't yielding the results you hoped for. By analyzing these expenses, you can pinpoint areas where you can cut costs or reallocate resources to improve your bottom line. Now, calculating SG, and it is pretty straightforward. You simply add up all the selling, general, and administrative expenses for a specific period. For instance, if your coffee shop incurred $20,000 in salaries, $5,000 in rent, and $2,000 in marketing costs over a month, your total SG, and it would be $27,000. Easy, right? But remember, this number is just one piece of the puzzle. It's essential to compare SG and expenses to your total revenue to get a clearer picture of your business's efficiency. And speaking of comparisons, it's also helpful to look at industry averages. Different industries have different norms when it comes to SG&A expenses. For example, a tech company might have higher SG&A expenses due to significant marketing and R&D costs. In contrast, a manufacturing company might have lower SG&A because they focus more on production costs. Knowing where you stand compared to others in your industry can help you identify areas for improvement. But let's not forget that SG&A expenses aren't just about cutting costs. They can also represent investments in your business. For instance, spending on marketing can lead to increased brand awareness and ultimately more sales. It's all about finding the right balance between managing costs and investing in growth. Now, before we wrap up, let's touch on some limitations of SG, and while it's an important metric, it doesn't give you the whole picture. It doesn't include the direct cost of producing goods, so you'll need to look at other financial metrics to get a complete understanding of your business's health. Plus, the classification of expenses can sometimes be subjective. What one company considers a selling expense, another might classify as administrative. So, in conclusion, understanding selling, general, and administrative expenses is crucial for anyone involved in business. Whether you're an entrepreneur, an investor, or just someone looking to manage your finances better, knowing how to analyze and manage SG&A can help you make informed decisions that lead to greater efficiency and profitability. So the next time you hear someone mention SG&A, you can nod along with confidence, knowing you've got the inside scoop on what it really means.